All right, welcome back. So let's. I haven't posted a video in a while. I think it's been like a week or so. And there's pretty much been the reason why there's been a shift and change in the market. Um, I am going to go over a win that I took today on NAS100, August the 7th, 2026. But I want to talk about a little bit about the change in NAS, what I noticed. So if you look here onto the left, this is a 4 hour view. So pretty much from pretty much starting in March. So from March um, all the way from April to May. So for like a good 3 months, NAS never major structure has never gotten a retracement pullback, which really once as you see here, as soon as August hit, it's pretty much the same thing. And that pretty much kind of messed me up. I took some losses and I really didn't know how to mentally handle breakouts in NAS because before, for the longest, um, I always used the fib, and the fib would always, when you look at the Fibonacci, the tool itself, is used to measure a move, statistically and probabilities. If a move starts from here and then we shoot here and we start a retracement, usually you want to see retrace to the 50, 60, and up in this range up in here. And usually what happens is once price will come here and we start showing signs of we want to go back up, that's typically a good entry point. So you kind of always knew like where price would go. However, when you look on major structure, because I do major structure, minor structure, and microstructure. So if you look on this one, this absolutely has no structure whatsoever. Like there's no pullbacks. Like for like on major structure for 3 months, price just been moving, right? So that just leaves you with minor structure. So if you look on a 30 minute, right? If you look on a 30 minute, now we're dealing with minor structure. So let's look on the 30 minute. Even in minor structure, that's not really like a lot of like a lot of pullbacks per se. Like okay, when you look here, price made a new high. We beat this high. Boom. Statistically speaking, from down here to up here, price is supposed to pull back down here. Price just kept going and kept going and kept going, and we got some type of pullback here. Now, typically on a Fibonacci, right? This right here, okay, we beat this high, we made a new high. So from down here to down here. So typically, when you have price pull back to these depths, right, that's typically sign of a reversal. However, price just kept going, right? We even beat this high, we made a new high. So let's say, for example, if I pull this out, price from here, price pretty much started pulling back. We pulled back to like the 50 barely and came back up to liquidity, um, to premium price. Okay, and then came back down. Now, when price does this drop, that's usually a sign that we're finally going to reverse and actually come and cover all this ground. What did price do? Turn around and went up for other months. So I didn't really know how to actually deal with that on NAS, and that's just me just not knowing the pair that I'm trading. And that's the thing that when you trade a pair and you know a pair, over time, a pair behaves differently over time. So when you look at NAS and how NAS 100 behaves, for 3 months, we pretty much went with no pullback. Now we got to the summer months. When you look at the months of June and July, price pretty much it was giving us buys and sells pretty evenly. Like if I come to the 30 minute and then I want to drop down here in the summer months, you see price pretty much started kind of like really obeying structure. Like say for example, price, this was the last high on the fib, and this was the last. Okay, this was a high. Price made a newer high. So what happened was once price boom and we started retracing. Once we pretty much got to this depth, this zone here, you see price came back up and we just pretty much went back down. That's really started following market structure. And then guess what day that was? That was literally July. It made that high July 3rd. That's when it really started taking effect. And the exact same thing happened data to the right with August 3rd start taking effect. So we brought down. Then what happened was after we pretty much got down, We made this on major structure. We came on down, right? Boom. We reversed to what, the 50, the golden zone, and we shot down. We continue on the downtrend, right? So like that's how things it's supposed to go, right? And it's pretty much buys and sells evenly. So what happened was literally, right, when you get into like August, let me see, like once we started buying up here, started getting to like August 3rd, kind of the same thing, like price really at the end of July 30th. You see here, price started doing the same thing, just buying, 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 buying. At this point, you think, okay, we're about to get a retracement from here to here. We made this new high. We're about to get this retracement. Didn't even get to the 50, turned around and just completely just went up. It was like, it was ridiculous, right? Now this whole thing, we just went. Now you would think this bad boy right here, like yo, we're about to come and we're gonna clock all the way back down here, and you see the same thing. Price price already just reversed. So it really I had to do a lot of back testing, and my strategy is still the same, but I did change some things. So what I'm gonna do is I'm gonna go through that with y'all today. So this is price today on the 1 minute. Let me go in replay mode. Select the bar and let me go to 930. All right, so pretty much we're looking at markets, market opens. So what I do now, what I revamp is I added another support and resistance um indicator, and it's just for me to go faster, because the problem that I had, once price starts doing this, there's no data to the left. Like you have nothing. So how do you know support and resistance? So what I end up doing as I started to trade, I really had to go back and get older data, especially when we got down here. This is where a lot of my losses occurred, because when we got down here, there's literally no data to the left, except if you go all the way down back to April. And unfortunately, those 1 minute support and resistance, they price over here was completely disrespecting them. So I kind of had to just kind of change a little bit how I had to do things, and just really I started really focusing more so on market structure itself. So I'm gonna walk through that today. So what I did is I did go and I did mark off some zones, but I don't really rely on those zones, and I do not look for price to respond to these zones like how I used to anymore. But however, they're nice to have. Just know that hey, once price get here, we may have a reaction or we may not. So pretty much what I started doing is I started looking at highs and lows. So I'm looking at price right now, and I'm like, okay, where was the most recent high, which was here? So we just made a new high, right? So we're uptrending, 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 right? This right here was, let's see, this right here was the most recent high, and this right here was a higher, we making higher highs compared to this one, and we're about to pretty much make a new higher high than this one. So pretty much I'm looking on a higher time frame, on a higher time frame. So I'm targeting these tops here, and I'm gonna grab some of this over here. So literally right here is the nice golden area. So I'm looking around this area. I am looking for price to return. So in a higher time frame, this is a demand zone, right? Once price hit this area, we're going to shoot up. Okay, so with that being said, once market opened, we shot up and price started returning back to the demand zone. So let's see here. So market. So the market opens and I'm waiting, right? So normally what I would do, and I think, I actually think I did take this trade. I think this is the trade I took. Right, it is. Okay. Let me go back. Select the bar. Boom. So no, okay, so I'm waiting on price to pretty much return to this area. And I should have marked this more correctly. So let me bring this up all the way to just boom. Let me touch that. All right, because that was the most recent last high. So okay, so boom. So what did you see? You see market come and market up. Nope, dang it. Sorry. So market came And okay, I'll just start here. So you see, market actually came. It tapped into this demand zone in a higher time frame, and then we started hitting it with some rejection candles, which is wick candles. Now, that's pretty much the change of strategy. I'm not really looking and waiting on these lines with the indicators. It's just nice to have, but I'm more so looking at highs and lows. I'm looking at price to return back to this higher and low zone and make some type of rejection or whatever. And if price comes to this point and makes a rejection to the upside, I'm looking for buys. If price comes down here, okay, so you have a high. This is a higher high. What is the most valid low? The most valid low, I would say, is this low or this low. And I kind of really picked the bottom one because if we're coming and we're transitioning into sales, why would price come down here? I'm looking for price. If I was looking for sales, I would wait for price to break down here, break, retest, and hit me with a rejection to the downside. So I'm either looking for a play here, or I'm looking for a play here. Other than that, I'm not trading. That's the difference. Now, when price, I'm going to give another example on what happens when price just keep going up. So I'll give that example next. So what happened was for the day, once price did this, when you look at my confluences, still the same entry. I got a red candle that gets engulfed by this green candle, right? The body wise. So from the body of the red candle right here, you see the green candle, it finished above the body. I don't really care about the wicks. So once that happened, right, we're in the zone. This red candle is my entire zone. I include the wick down here. So once this next candle prints, we're automatically in the zone, right? Candle came down, it wick this candle wick down, rejection, this candle wick down, rejection. So what do we got going on is we got a red candle got engulfed. That's one confluence. The second confluence on a major demand, on a higher time frame demand, we have price rejecting with a wicks. That's number two confluence. Number three confluence is the next candle also rejected and closed green and is starting to poke outside the zone. That's number, let me see, one, two, that's number 4 or 5 confluence. So I got the rejection. I got a rejection from this demand zone, and I got two rejection candles. Okay, 3, got another 4, a confluence with this red is actually being engulfed. So pretty much at this time, what I started doing, right around, I didn't wait till price get here. In fact, I think I actually entered like right as soon as this candle, I think kind of once I saw that candle, that was enough for me. I kind of entered into a trade. I got a little wary. I did get a little wary. I thought I was going to lose when price came down here, big red, nice big red one. But we just rejected, right? Price tried to retest. So where did I take price and where did I think price was going to go? Well, typically that's when I look at these different levels, right? Like okay, here, that so you got that's why I did this other indicator because it gives more of levels. But it's I'm looking at this thing and I'm like, okay, I'm looking at it and I'm like, all right, based off this, here's a concentrated area where price pretty much reverse. So I'm not solely relying on these indicators as much because NAS100 just really started disrespecting them. So I'm looking at this level. Also, I'm looking at this level right here. Okay, I'm looking at this level right here, right here. Okay. Now, I'm not solely just looking at these levels. It's a mere suggestion. What I'm looking at is I'm looking at the velocity of these candles. If price starts slowing down and not giving the same rigor, then I'm looking to get out the trade. If price does not close bearish, then I'm looking to get out the trade. All I want is a quick pop, right? That's all I want. I don't even want no drawback, right? I just want a quick pop today, right? Something quick. It's Friday. I ain't trying to hold no trade on Friday, bro. So what happens is boom, pop, right? Boom, pop. And I think what happened is once we had got to here, once this candle started doing this, I didn't wait for the candle to close. I think we got here and we started like boom. Once we started doing that, I called it because we literally came to this zone here, which was a zone I actually marked out to the left. Here, um, these zones were bigger, So I pretty much marked them out like these like nice big zones. I didn't even pay attention to these zones over here, honestly, because this is market opens, and that's why I like market open. Price is moving, like it's moving like crazy. So once it did that, got a quick pop, almost a 1 to 2, and that was my win for the day. So another example, if I go back and let's select the date, and let's say Monday. So you know, low key, I was getting cooked. And I was like, yo, why is NAS pretty much not respecting the levels anymore? So pretty much how I start looking at charts. So like say for example, this is the market's about to open. All right, so we're pretty much on a down. We're going down. We're in a downtrend, right? So pretty much I'm looking at this and I'm saying, okay, the most lowest low was here. Okay, before that, the most recent high, lower high was here. So I'm gonna take this. I'm gonna start at the body, and I'm gonna draw it to the wicks. Okay, and this is the most recent lowest high, and this is the lowest low. Okay, so I'm gonna come right here, start the body, draw the wicks. This is a low. So what I'm looking for at this point, right? I'm looking for price to break up and then give me some type of rejection to this and go up, or I'm looking for price to break down, give me some type of rejection and go down. So boom, market happens, market start. Okay, boom, right? We come out, right? We do get the slight rejection, but I'm still following my entry, right? I need a green candle to go off of, so I'm chilling, sitting on my hands. That's really the art of trading, is being able to chill. Okay, boom. I did like that candle, but of course, as you can see, price started cooking to the upside. So that shifted my bias to buys. All right, that shifted my bias to buys. We're no longer sales. I'm not entering into the day with a bias that I'm married, because I'm flowing with the charts. As the charts flow, I'm a flow. And then the way I'm doing it, I can pretty much cut through the bull crap and not get faked out, right? Because people don't really switch biases because they typically get faked out. So this is looking nice right here. All right, this is looking real nice right here, right? So this is a buy. This is now a buy. We just made a higher high. So all of a sudden now, we're pretty much changing character, right? So I'm gonna go ahead and mark this out. So we changing characters point. This is a rejection to this zone. We made a higher high, right? This is a red candle. We're kind of engulfing it, not as much. I want to see more of engulfing because the price could literally come up here and just go down. So I want to see a little more. Okay, okay, okay. Start coming down a little bit, but I don't care because I have my criteria. I'm gonna buy from here. I'm gonna sell from here. That's it. You're not gonna fake me out, bro. See, before I would get faked out on something like this and lose. Not gonna fake me out. Not gonna fake me out at all. I'm just waiting. I'm waiting. I'm waiting like a lion in the forest in the jungle, looking at its prey. I'm waiting. I'm waiting, and then I see that red candle. I like the way that red boom, and I'm like, here we go. Look at this. We just made a higher high, right? Right, and it's not a strong high. It's a lot of wicks up here, so I'm patiently waiting to get that confirmation, right? I got a zone here and a zone here. Can't forget about this zone, right? It's a higher time frame zone here. This whole thing here is a higher time frame zone. So what do I see? Right? I see this red candle, right? Tried to come down and we reject it from this zone and we start rejecting from this zone, right? Because if I bring this down a little bit and put that right at the top of that wicks to the left, that green candle, if I can, boom, right there, like right there, right? Well, you see this red candle, right? We reject, and then look at this level of resistance, right? You got 1, 2, 3, 4, 5, 6 candles just get what engulfed and finish this green candle. It pretty much it did that. So what I did is I mark out my zone, and then I'm just waiting on price to tap me in, coach. Boom, price tap me in, and then I go ahead and I make a beautiful trade, right? Profits. So that's kind of just like I kind of went back, and it took me a lot of hours to do this. I was up till 3 o'clock in the morning, and yeah, that's how I'm trading now. So and that's really how the game goes, and how I learned is that you got to really get to know your pair. That's why it's good to just trade one pair, because you really cut back on that losing rate. Like I used to trade gold, but I don't trade anymore. I'm waiting until Donald Trump is no longer in office. Just because one too many times his tweet, you don't know when it's coming, but it will 100% take you for a ride, right? So, I mean, when you're trading gold, and let's say it depends on what time frame you trade in gold, your stop loss needs to be at least 100 pips. And so I'm like, nah, I'm just trading NAS. I like the way NAS moves. So yeah, that's pretty much that. Oh, and what I did want to show is like, say, okay, so say if NAS starts going, right? And then we get something like this, then what happens is it literally, all right, so you got to ask yourself again, price came, right? We made a high, we made a low, and we just made a higher high. So at some point, price now has to come and we have to retest this zone particular, right? So all I'm doing is waiting on price to retest the zone, right? Price never retests the zone, so I don't enter into a trade. And then I'm looking at these candles, big green candles, big green candles. I'm looking at these green candles, they're getting small. That lets me know price is about to do some type of pullback. So I'm looking at this zone here. Let me draw the wicks, right? Boom. So I'm looking for price to pretty much touch the zone and buy up, but these green candles getting small, so I'm a little weary. All right. All right, boom. So let me carry this. Let me just make this a little bigger so I can see. All right, so boom, we in another zone, and this would be a no trade. If I didn't catch that beginning trade, this would be a no trade because it's already 11:30. Do not trade past 11:30. But however, you can see this red candle actually starts to reject. However, you do get candles start closing in the zone, so that's a red flag that price is going to do what? What is price going to do? And price, yeah, prices. These candles are so small. So again, price didn't come. Again, this is outside the time. So, anyways, I have to find an example where it's inside the actual time. However, though, I could have actually traded. I could have traded this because let me let me go to a bar thing. And this is example like when there is no pullback, how the hell do you get into a trade? Here's what I'm saying. You got to look at highs and lows. We just broke and made a new high. This right here is a high. So this little bitty thing, this is a pullback. As little bitty as that is, it's a pullback nonetheless, right? So when price I'm looking for price to pretty much come back and touch the zone. So what happens is you got a red candle that got engulfed, price made a higher high, and we wicked and touched the zone. So have very well, you could have very well gotten into a trade because it does fits my trading plan. It does fits my criteria. Now, how do you know when to take profits? I mean, you got some data to the left here, thankfully. So you could have waited till then. But how would I take profits if I'm not looking at data to the left? How would I know when to get out of a trade? This is how I know. So let's say, for example, right? Boom, 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 boom. Okay. So I'm looking at these candles. Would I have gotten it out of this trade here? You got all green candles, and then you have a candle that finished red. But guess what? You got a lot of wicks to the downside. So um, I would not have gotten out this trade at this time. Okay. Boom. All right, so I got another candle that printed red. However, we got wicks to the downside, and we did not really engulf the green candle. Right, I'm looking for a complete engulfing. I want the whole candle to be engulfed. Right, so boom, there's no data to the left, so I'm like, all right, when I'm gonna get out the trade? 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 When I'm going to get out the trade? When I'm going to get right here? I would have got out the trade right here. So now we had this green candle. We got finished engulfed by this red candle. So I probably would have just boom. I would have got out for a nice 1 to 2 point, almost a 1 to 3. So that's kind of like the new thing, new strategy I'm trading. It's the same strategy. It's just I have to, as the markets change, you kind of got to change up your strategy a bit, right? The market is liquid. We're dealing with currency, right? We're dealing with financial markets. We're dealing with the bank. What is all that got in common is motion. Things are constantly moving. Things are changing. Banks. What are banks? Banks is the point at which the water and land meet. Okay, what is currency? Currency is a current. Is dealing with the ocean. Is water. What is liquidity? Right, it's water. It's movement. Water moves. It's never stationary. So you're dealing with a constant moving market that moves like water. So you got to be able to have standards and SOPs, standard operating procedures that fits that behavior, that temperament. If your strategy fits the temperament of the market, it's a profitable strategy. But nevertheless, that's it. Goodbye.